right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Rocket Companies Inc. actually had a run from yesterday after being in very bearish run, right? It was in a very bearish run, and it hit highs of 34.40. From that point forward, it's been falling. Hit lows here of about 19 and 41 cents, and it leveled off slightly. And right before the run, it was close to $20 at 19.95, 19.90 area. And from that point forward, we saw a run. And something I talked about yesterday was we're going to have to pay close attention here to our support level. This is where it slightly leveled off before the run continued, and this was not necessarily our true support. Our true support was the 50-day moving average, but this was a point of reference that can let us know if the bulls were able to stop this from going anywhere lower, or was it going to break through it and hit newer lows fairly quickly. And I mean, we clearly see that here, how they used it as support. I mean, the bulls heard me. It's like they watched this video and they knew. They were like, oh, it hit that point. Let's run this one up before it continues and use it as support. But honestly, that's why it's so great to look at chart analysis and use them as a point of reference. I would never tell anybody to only look at chart analysis and that's it. That's your only research. No. You want to know news. You want to know chart analysis. You want to know balance sheets. You want to know the outlook and innovation of the company. You want to know more than just the charts. But one thing I can tell you is charts takes it back to the beginning of time, literally. Like as if you were to change, going from an Excel sheet that has the equations implanted in it and you just type in the numbers, actually you calculating the numbers or, breaking it down with a calculator and not a scientific one or normal one. That's what charts is when it comes to investing. It's like bringing it back to the old long, like almost a long equation, right? Of the long division or the long multiplication that you go step by step, but you're doing it the old school way. That's what charts really is. And that's what I love about charts. It's authentic, it's original, and it's what always has been used as a method to know the direction of a stock and likelihood of what is going on and where it's going. And I love it when I see resistance levels being broken through and turn into support, and when support levels clearly show how they were used, and from that point forward continue to work its way up. Now, that point right there is important because it was broken through 2 times. It was broken through within that same candlestick. It hit lows here of 2035, but it consolidated there at 2050, and then it started to rise, and then it broke through it again, and it consolidated up here at around 2068 and continued to rise. But very important to keep that in mind, that the bulls are actually doing their best to keep this one up, but the bears clearly showed us that they can appear and do some damage fairly quickly. I mean, they brought it down from 23 to 21, $2 difference within 1 hour. Actually, within 30 minutes. 1 hour's over here between these two. Within 30 minutes, they did that damage. And that's one thing I was very concerned about yesterday. Was this going to get sold off fairly quickly for profits, and how low was it going to go? And if this was not used as support, as we see here, the bulls were not going to have this great recovery they did here. This would actually be on its way down in this direction and probably ended up below the 50-day moving average. But we're going to move this over now to our new locations so that we can see what is important for Monday. So the 50-day moving average is one of the most important things right now for us here on this stock. One of the most important things because of the fact that it's moving up quickly and trying to catch up to the price every single day. That's one thing that doesn't stop for nobody. 50-day moving averages continue to move up regardless of what's going on in the market and what's going on for the stock. So 50-day moving average is important. It's 21.45. I'd write that down. That number is the one that's going to allow us to know on what side of the chart we're in. Are we in the bullish side or are we on the bearish side? As of right now, we have been in bullish territory for 2 days after being in bearish territory for some time and jumping up and down with volatility. But finally, for 2 days, we've been in bullish territory, and the question is, will this run continue? And it can if the bulls continue to break through resistance levels. So write that down. 2145 is our 50-day moving average. Now, the bulls want to move away from it as far as possible as they can in an upward direction. And this momentum here seems pretty healthy. Now the question is, could the bulls continue it after closing at 2301? Well, they need to break through resistance, and that resistance level is 2310. If the bulls can break through it, turn it into support, and pull up in an upward direction, the bulls will be on their way to hitting newer highs and newer resistance levels to continue this momentum. Even though this slight dip happened, continue the momentum to work their way up further away from 2145, the 50-day moving average, in an upward direction. Super important for the momentum to continue. The bulls need a break through 2310, turn that into support, and continue to move their way up to newer highs. Now, on the other spectrum, we have what the bears want. And the bears want to tear this one down as quickly as possible. We saw that happen right here early on the day. And honestly, quickly after that, the bulls reappeared and stopped this one from falling to newer lows and brought this one back up. But the bulls, if they lose traction here, the bears can quickly bring it down again, and that is down here at our support level, and that is 2185. They want to cross that. The bears want to cross that, and even though by crossing that they're still in bullish territory, their goal is to get as close as possible to the 50-day moving average to then cross 2145 and bring this in to bearish territory below the 50-day moving average. Now, 2185, I want to emphasize how important it is because you need to pay close attention to how the stock is reacting at that point. As we saw yesterday, the bulls actually brought this one back up from those lows here of the support level at 2150. Same thing, and I told everybody to pay very close attention to how this stock reacted. How quickly is it moving through it? Is there a chance for the bulls to reappear? As they did very well, but that's another thing as well for this support level. 2185, how is the behavior of the stock? Are the bears bringing this one down fairly quickly, or are the bulls trying to bring this one back up before it hits newer lows? Because there's a small window between 2185 and 2145 to keep an eye on of uncertainty, because this can change fairly quickly. Either the bulls take control by bringing it back up, or the bears are just one step closer to gaining leverage, crossing the 50-day moving average, and getting into bearish territory. So I want to emphasize, pay very close attention to the behavior of the stock at 2185. Or is it quickly moving down? Is there a chance for the bulls to reappear and bring it back up? And I want to emphasize that 2310 needs to be broken through by the bulls, turn into support to continue this momentum and work their way up to newer highs. As always, if you found this video helpful and informative, please do so and subscribe. But don't forget to click on the bell. By clicking on the bell, you can turn on all notifications to not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button and let me know you watched this video. At the end of this video, there's going to be a pop-up video. In that video, I discuss about the Federal Reserve pumping the markets on scheduled dates. And I use the S&P 500 index as a point of reference because I've come to notice, and it's worked for me, that it rises up several points on those scheduled dates. Well, what does that mean for us as investors? If the S&P 500 is rising up several points on scheduled dates, there's 500 ticker symbols within it rising up with it. You got to do your due diligence and research. I'm not here to tell you to buy, sell, or hold, but the good information is, and the positive information, that these ticker symbols are rising 30 cents to $3 per share. I know it doesn't sound like a lot, but per share, that does add up. Like again, I said, I'm not here to tell you guys to buy, sell, or hold. I'm just here to enlighten you guys on the great news that there's an opportunity to make profits and maximize them and minimize losses. So check out the video. Great information. I don't want you guys to overlook it. I'm just here to help and enlighten you all on the great news that there's an opportunity to profit. Thank you guys so much for watching, and let's make some money.